Today, I have a very special topic for you. What would Warren Buffett, the legendary billionaire investor, do if you were starting over in investing in 2024? Warren Buffett is known as one of the best investors of all time, and he's amassed a multi-billion-dollar fortune investing through his company Berkshire Hathaway. But he's not only a great investor, he's also a great wit, and Buffett enjoys sharing his folksy wisdom with fellow investors. His advice runs the gamut of topics, not only about investing but about life in general. But today, let's stick to Buffett's advice that could help make you rich. How would he approach the stock market in 2024, when we are facing unprecedented challenges such as the climate crisis, the pandemic, the geopolitical tensions, and the technological disruptions? Well, the first thing that Buffett would do is to follow his own rules. He once said, "Rule number 1 is never lose money. Rule number 2 is never forget rule number 1." This means that Buffett would avoid investing in risky or speculative stocks that could wipe out his capital. Instead, he would look for solid and stable companies that have a competitive advantage, a strong brand, a loyal customer base, and a consistent cash flow. He would also look for companies that are undervalued by the market, meaning that they are trading below their intrinsic value. One way to find such companies is to use the value investing strategy, which is what Buffett learned from his mentor, Benjamin Graham. Value investing is the process of buying stocks that are cheap relative to their earnings, assets, dividends, or growth potential. Value investors use various metrics, such as the price-to-earnings ratio, the price-to-book ratio, the dividend yield, or the earnings growth rate, to identify stocks that are trading at a discount to their true worth. Another way to find such companies is to use the mode investing strategy, which is what Buffett popularized in his annual letters to shareholders. A moat is a term that Buffett uses to describe a company's durable competitive advantage, which protects it from competitors and allows it to generate high returns on capital for a long time. A moat can be based on various factors, such as the quality of the product or service, the strength of the brand, the network effect, the switching costs, or the economies of scale. For example, some of the companies that Buffett owns in his portfolio that have a strong moat are Apple, Coca-Cola, American Express, and Bank of America. These companies have loyal customers, recognizable brands, and dominant market positions that make it hard for competitors to take away their profits. So, if Buffett were starting over and investing in 2024, he would look for companies that have both value and moat characteristics. He would also diversify his portfolio across different sectors and industries, to reduce his exposure to any single risk factor. He would also keep some cash on hand, to take advantage of any opportunities that may arise when the market drops. But how would Buffett find these opportunities? Well, he would follow another one of his famous quotes: "We simply attempt to be fearful when others are greedy and to be greedy only when others are fearful." This means that Buffett would not follow the crowd or the hype, but rather use his own judgment and analysis to determine the true value of a stock. He would not buy a stock just because it is popular or trendy, but rather because it is cheap and has a strong business model. He would also not sell a stock just because it is falling or facing some temporary challenges, but rather because it is overvalued or has a weak business model. Buffett would also be patient and long-term oriented. He would not chase short-term gains or losses, but rather focus on the long-term performance and potential of a company. He would not trade frequently or pay attention to the daily fluctuations of the market, but rather hold onto his stocks for years or even decades, as long as the fundamentals of the company remain intact. He would also reinvest his dividends and profits, to take advantage of the power of compounding, which is the process of earning interest on interest. Buffett once said, "Someone is sitting in the shade today because someone planted a tree a long time ago." This means that Buffett would invest for the future, not for the present. He would look for companies that are not only doing well today, but also have a vision and a strategy for the future. He would look for companies that are innovating, adapting, and growing, in order to survive and thrive in a changing world. For example, some of the companies that Buffett has invested in recently that are future-oriented are Amazon, Snowflake, and Verizon. These companies are leveraging the power of technology, data, and communication, to create value for their customers and shareholders. So, to sum up, if Buffett were starting over and investing in 2024, he would do the following. Follow his own rules of never losing money and being fearful when others are greedy and greedy when others are fearful. Look for companies that have both value and moat characteristics, meaning that they are cheap and have a competitive advantage. Diversify his portfolio across different sectors and industries, and keep some cash on hand for opportunities. Be patient and long-term oriented, and reinvest his dividends and profits. Invest for the future, not for the present, and look for companies that are innovating, adapting, and growing. I hope you enjoyed this video and learned something from it. If you did, please hit the like button and subscribe to my channel for more videos like this. Also, let me know in the comments what you think of Buffett's investing strategy and what other topics you would like me to cover in the future.